Yo guys, SelfFX, welcome back to another video. So today I'm gonna be talking about a few discoveries that I've pretty much learned, and I'm just sharing with everybody, with the community and all that, right? This is highly also in confluence with TEPTA, time in PD arrays, right? It's pretty much near and closely the same thing. The only difference with it is we're referring to quarters, not candles or PD arrays, right? But we're gonna be going into full depth with it, right? I'm just gonna be explaining it within this video on the base level, and then I'm not really quite sure if I'm gonna be willing to just provide everything, but I might just be adding in a few more additions to this, and then a few more insights that can help you with your trading and everything, right? So I'm gonna begin with the daily time frame, just to explain it on a base level with a little benefit of hindsight, you know? Okay, what are we referring to? The last two quarter ranges. So from here, the 1st of Jan, right? Going all the way to the 5th of January. This is a full month range. So this range would be regarded as Jan, right? 2024, right? Then the one before it would be December. Basic knowledge, right? Very, very, very easy. 2023, right? Okay. Now we're gonna be going a bit into detail. When the year opened, right, price drew lower, right, then reacted higher. It's very clear and simple. The price reacted based on this fair value gap, right? When price falls into a PD array, we expect it to either regard it or disregard it. In this case, price disregarded this one and the one above and the volume imbalance, and went specifically to this one right here, right? So the quarterly theory is very crucial to understanding this. So I just removed it when I try re-adding it, right? So we're gonna say DAYE, right? Then we're gonna add it. Then we're gonna enable everything, and then also historical data so we can see the previous quarter ranges, right? Then I'm gonna make this full screen again. This range right here was a public holiday beginning from the 2nd of Jan going all the way to the 8th of Jan, right? So not a public holiday, I mean this whole entire gap, right, would be regarded as Q1, right? So how I personally utilize this is I combine both of them. The Q2 range, right? This is the weekly range, and the empty one. I combine them into one quarter, right? So this is initially Q1. Okay, now getting into the saucy things, right? That was a big cringe, but yeah. Notice the price within Q1 reacted higher of a fair value gap, right? But now the specific thing is that you should notice is where exactly did it form. Very, very specific. It formed within Q2, December, the first week of December, which is Q1, right? Price created a PD array heading into Q2, right? Drew higher, went back lower, right? Tapped this BZ, which formed within Q1, and then reacted off it. That's the base level understanding of it. Simply, price in a specific quarter, for example, if we're in Q1, price will tend to drop back to a PD array that formed within the previous Q1 quarter. For example, price within Q1 is reacting off the previous Q1 PD array. price within Q1 would be referring or reacting based on the previous Q1 quarter range. Hopefully that is making sense, right? Those are a few signatures and the highest probability PDRAs to trust, right? Okay, now we're simply going to be refining this range back, and then we're going to be breaking this whole entire, okay, that just looks weird, range. This whole entire range, right? Okay, now I'm going to be going into the 90-minute time frame. I believe you have to have a paid subscription on TradingView for you to have that, but yeah, that's pretty much something you might have to invest in, right? Okay, this whole entire range was a full week just last week, right? We're breaking this down based on time, right? How to pretty much utilize time as a bias, right? Using time and price and time and PDRAs, right? Time and quarters. I don't know, but yeah, this was Sunday at 6 p.m., right? New York time. This whole entire range is regarded as a Monday full quarter range. So what do I mean by that? This is Monday Q1, right? Hopefully this is making sense, right? Just gonna zoom in there. This is Friday. Friday has no quarter, so we'll just leave that as Friday, but it still has a full 24-hour range. Not full 24-hour, but it has quarters within it too, right? Notice the price drew lower, and then within Q2 of Monday, right? Within Q2 of Monday, it reacted and reversed, right? But what was it reacting off? Hindsight and order block. Can you see that? We can say this is a bullish order block, right? Supporting higher prices. But now how do you trust this PDRA, which formed at 4:30 and reacted off 4:30 the next day, right? Tapped, right? In correlation with the quarterly theory. The PDRA formed within Q2 of Friday, which is the London quarter, right? We can refine that and make it, but we can say this is Q2, right? Price within Q2 reacted on the previous day's Q2 range. Does that make sense? What do I mean by this and what am I referring to? Price will tend to, on the 90-minute time frame, this is why I look for this, right? On the 90-minute time frame, price will tend to drop back to the previous day or the previous days, right? Usually I utilize this up to a max of a week, right? If I'm looking at the 90-minute time frame, right? It will tend to react on a specific quarter based on the previous quarter. The times, when the times are in correlation, this is where TAPTA kicks in, time and PDRA, right? Notice this order block formed at 4:30 and then it reacted off 4:30. That's TAPTA, right? The time and quarters that I'm referring to is the whole entire range of Q2. PDRAs can form within there, but they do not have to be specific to time. They do not always have to be 4:30 to 4:30. It can be 4:30 to 3 a.m. It's still valid, right? So in simple terms, when you're trading, especially within New York, you don't want to see price react if it's reacting based on internal liquidity, because external liquidity of this whole entire range, right, would be the previous day high, right, and the previous day low, right? If it's not reacting based on any of this, what do? you pay attention to the 90-minute time frame, and you're looking for PD arrays that formed within the specific session that you're trading, right? And you want to see price react based off that, right? And how do you trust this PD array? First, it formed within Q2, right? Second of all, if you divide this whole entire range in half, it formed within the discount, right? From discount, from internal liquidity, which is this order block right here, which formed within a discount, to external, which was the previous day high. Price reacted off it, right? Okay, I'm gonna remove this just so that we keep our charts clean, right? I'm gonna drag this like this. Then now we're gonna say Tuesday, which is Q2, right? We can make this one red. Hopefully you're finding insights within this, because I'm pretty sure nobody's teaching this like this, right? I don't even know if people know about this. They know about TAPTA, but not the quarterly like this, right? But yeah, there's just ego kicking in a bit. But yeah, okay. Tuesday, I trade New York, right? On NASDAQ, we all trade New York, or I'd assume that we trade New York. You can trade your London, but when I'm trading futures, I like trading New York, right? Price drew lower, right? Price drew lower to Q3. The Q3 range, been explaining this on the models, right? The Q3 range is our New York quarter range. So we can say this is, just fix that. You can say this is Q3. Place this at the bottom like this. Then let's just even make the color green, just so it feels, yeah. Price reversed within Q3, right, of New York. But what was he reacting off? A P array right there, which is what? A busy. A busy is a bullish heavily gap. Buy side imbalance, sell side inefficient, right? But now here's the thing. Where did this PD array form? Within the previous day. Q3 range. It formed within the previous day Q3 range, which formed at turn 30, and then price reacted off 9, 7:30, and 9. Hence, I'm saying price does not have to be on a specific time whereby this fair value gap formed at turn 30 does not have to react off turn 30. As long as it's within the quarter ranges, within the 90-minute time frame, specifically this time frame right here, right? This formed, right? Okay, now if I can go to lower time frame, like the 5-minute time frame, right? I'm gonna just only focus. I'm gonna just only focus on this range, which is the Q3 range. This is the whole entire New York session range from 6 a.m. to 12 o'clock. You can see that, right? And now if we enable the indicator, which I keep saying, you do not really need the indicator. It's just very nice to have, right? It's the one thing I actually charge for. And if you're gonna look for it on TradingView, you're not gonna find it, right? It's only for exclusive people. So if you want it, just hit me up on Twitter. I got you. But yeah, you don't really need it. As long as you understand the concepts, then yeah, it just makes workflow a lot easier. What model forms within that range? The New York session model, right? Which I've taught multiple times on the channel based on time and price, right? Let's let the indicator load. Then let's fix up the date. Okay, believe No. Let's just add in a bar replay to the end of the day. Let's see if it loads. Yeah, I've mixed up the dates here. What day was this? The 9th of Jan. So we'd have to take it to the 8th for you to at least show. Yeah, that's a little thing you need to identify when you look at the indicator. What does price do? When price drew back to the 90-minute fair value gap, which formed within Q3 of Monday, formed on Tuesday, what does price do? Price sweeps the London low, right? Then price sweeps the accumulation low, right? And then what does price do? We get a breaker right there. Price breaks above, draws lower to the order block, then reacts higher, goes back into it, taps it again, reacts higher. Internal liquidity, right? What does it target? This right here, which is what? The current day high. And then this right here would be the previous day high. Price went from internal liquidity to external liquidity, right? If we go back to the 90-minute time frame, from internal to external. Same way here, from internal to external, targeting the previous day high, right? Okay. Now we're gonna be going into Wednesday with the same exact logic. This is how you trade when you're looking at internal ranges and time and PDRAs based on quarters, right? Okay. This range right here, we'll just rename it into Wednesday Q3. All right, this is our special kill zone, right? Then we're gonna mark out the previous day New York quarter range, which is what? Q3. Right? Now we want to see what PDRA can we identify within this range. That's right here. Which is a what? A BZ. What is that? The bullish fair value gap. Right? The next day, we mark out our range from 6 a.m. Okay, let's just mark that. Let's even use the indicator because it's not going to show perfectly on the 90-minute. We mark out our previous day quarter range, which is right there. Let's see what price does. Price taps it right there within Q3, right? Then what does it do? It draws higher. Price went from internal to external. Price taps a PDRA on the 90-minute time frame that formed within the 90-minute time frame within Q3, which is the third quarter of the previous day, right? Price here formed within Q2, reacted off an order block that formed within Q2. Same thing here. Price within Q3 reacted off a fair value gap that formed within Q3. Exact same thing right here, right? Now we can even remove this. Then we're going to be going into Thursday. I'm just trying to go through the whole entire week for you to, before we even do that, let's see what was even happening within this range right here. Gotta look for the exact same thing. Hope this contrast is good. Let me even just patch it up and make it a bit darker. The opacity, which is, okay. I think I'm gonna make it like this. Even make it darker. Let's see if it shows. Okay. What does price do? Price sweeps the Q1 accumulation low. What else does it do? It sweeps the London low. It draws higher. We get a displacement right there, right? Price draws back into a fair value gap, taps it, it starts drawing higher. What's your first target? The accumulation high, even the Q3 high, and then the London session high. Then the previous day high, if it has not been tapped, but it has been, so that would be your additional target, right? Exact same model that formed here, formed exactly right there, right? Okay, let's go back into the 90-minute time frame. Okay, let's go back here. What time is it here? It's 10:30. With a fair value gap that formed on Monday. What does price do? It taps it at 10:30. This fair value gap formed at 10:30. Time and PD raise, right? Tapped the price, went from external liquidity, and how do you know that? Price swept the previous day high, right? Accumulated higher and then distributed lower, right? Let's see what's going on there. Let's pay attention to what's exactly happening within that range right there, right? Let's go to the 5-minute time frame. Okay, pretty much this, I believe this was the 8:30 news, so this would have been potentially a day that we would have avoided trading, right? Exact same model. Price sweeps the accumulation high, sweeps the London high, right? Draws lower, we get displacement. Q3 draws higher, taps the range factor, which is a fair value gap, another block, and a rejection block. It distributes lower. How do you take models like this? If you come to this range right here on the 30-second chart, right, you'd want to see displacement lower, a breaker like this, right? You don't see some form of a breaker like this on the 30-second chart right there. So just to simply explain it based on current price, right? What do I mean by that? We have a fair value gap right there, right? And we have a order block right there, right? And we have a rejection block right there. We do not want to see price sweep this high, right? And we're anticipating low prices. We do not know which PD rate is price going to respect, right? So what do? We go to the we pretty much, or how I do it is I mark out the whole entire range, right? Like this. I do not know where price is going to react off within this range, right? I go to the 30-second chart, and I want to see displacement. Let's see. We don't need that. Let's just see how price books. If price closes below this low, then I'll go short. No, this one is valid because price went above it. So price closes below it, right? Then I'll go short with a stop loss just above price right there, like that, right? My first target would be the accumulation low. The Q3 low right there, right? And then specifically the Tuesday period Q3 range. Which one is it? This one right here, the fair value gap that formed on the 90-minute time frame. Right there, just the high right there. That's enough for me to seek low prices, right? Okay, let's go back into the 5-minute time frame. I have to place my stop loss somewhere. Let's go to the 30-second chart, like that. By the way, when you have a high like this, right, that formed on the 30-second chart, right, if you wanna, you can potentially place your stop right there, right? But what I would want to do is place it within a significant high. So this high would still be valid and be the safest, right? If you're not comfortable with the wick, just divide it in half like this and then place your stop just above the equilibrium, because we do not want to see price drop back higher than that, right? Then we'd seek, let's see, low prices. Can you see it nearly just taps the equilibrium and then seeks low prices, right? Then let's see. Let's see. Price goes lower, right? Hits the period. Hopefully this is making sense. But anyway, we're not explaining entries or any of that, right? We just mainly focused on the timing PDRAs. Those are the specifics, right? So this was for futures. I know somebody's gonna be pulling up and asking me if this also works on Forex, right? So we're gonna go to Euro USD, and I'm just gonna Euro USD and explain just a few right there. Okay, now we are on Euro USD, right? We're gonna go to the 90-minute time frame. Hopefully everybody sees it, right? Okay. Now let's see this indicator load in, and then tell me, what do you see? Okay, doesn't want to load in on the 90 minutes, so we can go to the 1 hour, right? You can pretty much use this tool on the 1 hour time frame, but I generally like the 90 minute. So the 1 hour is fine too for this case and for this teaching, right? Okay, New York. We're gonna focus on this range right here. Let's mark it out like, let's even make it blue, it's fine. Let's say it's Q3, right? Just adding in a bit more fuel to the fire. What's this range? Q3, right? Okay. What's this range? Q3, right? Then I'm just gonna add in one more, assuming that you already have a grasp understanding of what I've been explaining, right? Okay. We're gonna remove this, and then tell me what is the one thing that you are able to notice within all this price action. Or just look at your chart. Let's even remove this bar replay thing. Okay. Q3, which formed on Tuesday. This is Tuesday, Wednesday, Thursday, Friday, right? Let's even bring back this to reduce confusion. What PDRA do we have within Q3 right here? This. What is that? It's a busy. What is it that you noticed about price? Price tapped it on Wednesday. What did it do? Reacted higher. Price tapped it on Thursday. What did it do? Reacted higher. Price tapped it on Friday. What did it do? Reacted higher. Went from external to internal. From internal to external. From external to internal. From internal to external. From external to internal. From internal to external. Right? If we go to the 5-minute time frame, we're going to be looking at the New York Q3 model, right? right? We're going to begin with the first one. When price taps this low right here, reacts higher, right? Your Q3 model had not formed, right? But now if you go into, this is why you have to pay attention to all PDRAs. The London Q3 micro model, which forms, now we can add in bar replay. Just gonna add it right there. Just gonna add it right there, right? Then we're gonna remove the New York micro model. The New York session model, I mean. If we go into the 1 minute time frame, see, bueno. This is one of the longest videos I've ever made. I don't know about the presentation, but the knowledge is crazy. Price sweeps the Q1 low, right? Draws lower, sweeps the accumulation low, right? If I can just zoom in a bit. Draws lower, we get displacement right here. Price disregards this PDRAs, draws higher, we get a second displacement, right? Which is a breaker right there, right? Then price reacts over fair value gap, and what's our target? From internal to external, right? Price seeks higher prices. What is our target? The previous day high. Which one is that one? It's this one. This was the current day high, had been tapped, right? The previous day high would have been initially this high right here, which formed on Monday. This is Tuesday, right? This is Tuesday range. So this is Monday Q1, so it's still valid. That would be initially our high. Then we would want to see price simply draw to it. Let's see, price taps it. And price, for you to be profitable, price does not have to reach that high. It does not have to, right? Okay, let me remove bar replay. Every time with the New York, you're looking for either 3 sessions, micro sessions. You're looking for 2 micro sessions and 1 proper session, which is the New York session range, the Q2 micro session range, which would form around 8:30, and the Q3 micro session range, which would form around 9:30, the open of futures, right? Okay, let's remove bar replay. Then we're gonna go into the next day when price hits that exact leg. Believe price in this case reacted off external liquidity. Hope I'm not adding any more confusions with a lot of movement within the charts. Let me even do it like this. Q3, we're going to be focusing on this range right here. This was the CPI day. What do we get? Price within Q3 draws lower. Within Q2 draws lower, right? This was a Q2 micro model. I'm gonna just do this one by one so that we do not get confused. Let's remove this, and let's remove this, and let's focus on this. The spike lower happened within 8:30. This was the CPI, and this is what CPI does, right? Price swept the accumulation high and the Q1 New York quarter high, right? Distributed lower than Q3, drew lower with it, right? Then now, if we want to focus on the Q3 micro session high range, it all looks confusing, right? But when you using time and confluence with all this, right, it begins to make sense. And I repeat, try watching this a few times just to grasp it, because yes, it's a lot of information. It's not, you're not gonna grasp everything at once, right? Okay, Q1 swept the New York, Q2 quarter low, and then Q2 drew higher, then Q3 heading into Q4 it sweeps the Q1 low, so it's still valid, and then Q4 is ignited or initiated as a reversal to seek higher prices, right? What is this? Fair value gap that forms within Q4. Price taps it, then it reacts, begins to draw higher. But now if you want to add this based on a micro cycle, right? This, you simply come, okay, we don't have to add it here, because now these are the 90-minute cycles, right? Micro cycles. I'm gonna try doing it like this, just to reduce a lot of confusion. Hope the colors are visible though. Watch this a few times because it will be complicated. If I can divide Q3 and off, right? Let's do it like this. Then we can increase the contrast like that. Okay. If I can divide Q3 in half like this, then duplicate this range like this, you'll notice the price reacted off Q3 and started distributing higher, right? If you want to disregard this fair value gap, what will you notice? You have a breaker right there. Price taps the breaker that formed within Q3 of Q4. Q4 within Q3, then it distributes higher, right? Hopefully that's making sense, right? Okay, this is why we say time and price, time and PD arrays, right? But nah, I think I'm even gonna leave it just right here. I'm gonna leave you guys to do a bit more research on your own, right? Try looking and studying to see what happened within this price range right here. Pretty sure you're gonna be surprised, right? Hopefully you guys found the video insightful, helpful, and yeah, if you got any questions, just hit me up on Twitter or leave a question within the comment section. Have a good day.